This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose more than 2% on Tuesday, reversing some of the previous session's losses, on worries about supply with the Strait of Hormuz mostly shut and U.S. allies rebuffing calls to send warships to help tankers move through the vital waterway. Brent futures jumped $2.74, or 2.7%, to $102.95 a barrel by 0357 GMT, while U.S. West Texas Intermediate crude gained $2.45, or 2.6%, to $95.95. In the previous session, Brent futures settled 2.8% lower while U.S. West Texas Intermediate crude slid 5.3% after some vessels sailed through the critical waterway.
Middle East crude benchmarks soared to all-time highs, becoming the most expensive oil in the world, even as trade slumps due to the US and Israeli war on Iran, with some traders arguing that the benchmarks have lost relevance due to supply disruption. The surge in the benchmarks, used to price millions of barrels of Middle Eastern crude bound for Asia, is pushing up costs for Asian refiners, forcing them to seek alternatives or reduce output further in coming months. Cash Dubai was assessed at a record $153.25 barrel on Monday for May loading cargoes, S&P Global Platts said, surpassing Brent futures all-time high of $147.50 in 2008.
Moving on to the top news in the energy sector.
Hong Kong's leader John Lee said he was very concerned about the rise in oil prices due to the US-Israeli war on Iran and that the financial hub, along with the rest of Asia, would see shocks and volatility due to the disruption of supply and oil prices. Lee, speaking at a press conference on Tuesday, said the government was working to ensure stable energy supplies and would increase transparency of information related to supply and energy prices. There are, of course, risks because the conflict is creating disruption to the supply of oil, Lee said, adding that authorities were working to mitigate risks and monitor price fluctuations.
The European Union will take steps to ease the impact of surging energy prices caused by the US-Israeli war against Iran, European Commission President von der Leyen said on Monday, while stopping short of major market interventions such as capping gas prices. In a letter to EU leaders before a Brussels summit on Thursday, she laid out plans focused on making more carbon emissions permits available in the bloc's market and providing more financial aid to industries. The proposal omitted more radical measures called for by a handful of governments such as a redesign of the EU's electricity market. Europe's heavy reliance on imported fuels means it is highly exposed to global price swings, and governments want to avoid a repeat of Europe's 2022 energy crunch, when prices hit record highs after Russia cut gas supplies. Next, we have the top news in metal market. Aluminium rose on Tuesday as Guinea considered imposing bauxite export quotas, stoking feedstock supply concerns amid Middle East conflict-driven disruptions, though gains were capped by growth fears fueled by rising oil. The most active aluminium contract added 0.14% to 25,125 yuan. $3,650.83, a metric ton as of 0255 GMT, after rising 0.64% earlier. Guinea, the world's top bauxite producer and source of about 40% of global supply, is considering introducing export quotas for mining firms as earlier as this month, Reuters reported on Monday.
Iron ore futures paired losses on Tuesday, advancing back up to two-month highs as demand for finished steel products for construction increases in China. The most traded May iron ore contract on China's Dalian Commodity Exchange traded 1.56% higher at 12 yuan and 50 fen, $1.82, a metric ton, as of 0315 GMT. Electric arc furnace steel mills in China have intensively resumed production of rebar and wire rod rolling lines, driving up the capacity utilization rate as of March 16, with production for both products expected to continue to increase this week, a note from Shanghai Metals Market said.
We will now look at the top news in the agricultural sector.
Russian wheat export prices rose to their highest since August last week, tracking rising global prices, and the shipments from ports picked up pace as the weather improved, analysts said. The price of Russian wheat with 12.5% protein content for free onboard (FOB) delivery in April was $238 a metric ton at the end of last week, up $2 from a week earlier, Dmitry Rilko, head of the IKAR consultancy, said. Sovcon estimated the price for Russian wheat with 12.5% protein at $238 to $240 a ton FOB, compared with $234 to $236 the previous week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.